Apologies. That's so funny. Not really. Okay. So we have the cup and handle, like I said, left side, right side. So here's our potential left side number one, right side number one, handle boom. Or we have our left side here, right side here, and then our handle pullback. So that's basically what I was talking about for the last 30 seconds. And for the volume, again, right here, we want to see this currently for August 10th. As of August 10th, we're at 7.5 million shares traded. We want to break 33 million shares traded, so we need more buying power than selling at the end of the month. Or we need it every day, basically, until we get through the end of the month. Coming down here, looking at financial data points, this is beautiful. You love to see sales like this. They had 124 million shares in 2020. Now they have 203 million. So, yeah, added a 75, 78 million shares to the pool. Not good. They are not profitable. Their forward PE is a little expensive at the moment, but I don't know if that is calculating in future sales. That is doing well. And I'll show you what I'm talking about. Earnings per share, sales past 5 years, 18%. That shows resiliency. Gross margins, 84%. That is incredible. FinViz recommends this out of as much as they can. Quick ratios over one. Ooh, the debt is not showing here, so that's a potential flag, but we'll check on it. So let's run our proprietary potential stock price calculation. Let me go ahead and remove some of this older fun data we had. So the market cap is 2,780,000,000. They are not profitable at a negative 111,870,000. And their sales are positive 343,460,000. All right. Going down to le cash and le dette. Before I do. Okay, we don't see it at the moment. So we only have enough data for the last 4 quarters, not year over year. So this next reporting cycle for this company, we'll be able to see, hopefully they're going to do over 76 million. Okay, they have earnings here actually soon. So by the time this video comes out, earnings will have already happened, and we want them to have over 76 million, preferably around 80 million, 84, 85 million. That would be great. Okay. This is a fantastic case study right here. So they spent 13 million to make 17. They spent 13 million to make 76 million. They spent less money, 12.8 million to make 84 million. They spent a little bit more, 14 million to make 93 million, almost 15 million to make 93 million. They dialed it back. They spent 13 million to make 89.5 million. Now, this only means a couple things. Number one, their brand is getting sticky. People are recognizing it by their brand. Potentially extending subscription contracts. So that's, some of the two reasons why costs of goods might be flat or going down, but the company is making more money because they're not having to advertise as less or create material to distribute. So that's great. They had one profitable quarter, but yeah, I think the next couple of quarters they'll still remain unprofitable, but hopefully on the Q2 they are a little bit more. They have better net income. We want better than negative 32. Let's get like get 0. That'd be nice. That would help out. Gross margins. This is the Q1 2024 was their best quarter of gross margins. Every $100 they spent, they got $185 back. That's just absolutely incredible. All right, continuing on with our calculations. Sorry. Jeez. Okay, just going on tangents. All right, so cash is 276,550,000. Now the debt is what they did not show us. Oh, they have like very little debt. That is great. They have very, very little debt. That is, yeah, that's great. but I'm noticing something. Okay, I'll tell you in a minute. Unless you see it, what do you see? Tell me something on this screen that worries you, and I'm gonna finish this. All right, you've had time. Look at their total assets, 529 million. Total liabilities, 555 million. When liabilities exceed assets, you get into that B word territory, and it's not the bad B word, it's not the cuss word, it's the bankruptcy. Um, one reason why I'm not particularly worried, we're seeing this as a trend nowadays, where companies have more liabilities than assets, and I'm just like, what the heck? But the thing that gives you solace and peace and comfort is their cash and assets. So they do have $276 million laying around. It's not the $8 million here that's killing them. It's other current liabilities and other liabilities. And some of this other stuff. Short-term debt included, long-term debt, accounts payable. So yeah, not good. But we're gonna continue on this conversation. Sorry. Just kind of losing it. Losing it. Okay. Shares outstanding, we have a total of 203,230,000. Bringing our potential stock price to $16.14. Current price is $13.55. Analyst target price is $14.71. I have the highest price target. Haha, I win. So $16 is the projected stock price. Institutions own 30.96%. However, analysts' price target and my price target are higher. So if analysts think this is undervalued, what I'm going to show you will be higher than 30.96. 38.37. So institutions are adding here. They think the stock is potentially undervalued or it's not a good deal. Okay, whoa. Oh, whoa, okay. So IGP added 1.3%, and we have Sun Corporation, who owns 95 million shares. What in the heck? I want to see if we have any Vanguard or BlackRock representation. Vanguard, we do. Vanguard has 30,000 shares. BlackRock has 1.4 million shares. BlackRock added 32%. So, uh, I mean, this stock is decently priced. I thought we were going to run into a snag, but no, I think we're looking good. That was our last stock. We're looking at CLBT now. I've done this one before. A little bit sloppy, but we're gonna redo it. Remove drawing. Wow, what a difference. This candle is sitting on it beautifully. We've got good test of resistance, not quite perfect supports here. Good test of resistance, great resistance here's. Here's perfect resistance, almost perfect support. Great tests right there, great test. So we have typically Fibonacci arcs. I have a little bit more confidence in them. This one, not so much, but let's see what this looks like at 380 to our 1411. Yeah, I mean, decent. Like, I think this could actually go higher. Let's see. 380. What about yeah, it's not bad. That's not bad. That's good. That's not that's decent. Final answer. Okay. All right. You're probably asking yourself, dude, why do you think the all-time high is gonna be around 15 bucks? Let me tell you. Let me tell you of a lovely chart. Okay, 380, 1411 is what I want. And what is that theme song? There is a story of a lovely lady. Ah, that messed it up. I didn't want to do 1411. Can I? Okay, I want to keep it there. I was distracted by singing that I totally messed up what I did. Okay, there we go. So the all-time high price target I have is actually 1493. And I have that because if we look at how these candles respect these purple Fibonacci arcs, it gives us a good story. So we have about perfect resistance there. Candle falls through. This candle falls through beautifully because it tests our one red ring here, falls below the perps. This red candle beautifully kisses the purple right there. Smooch, moving on up. Perfect resistance here, perfect support on the purple. I mean, 10 out of 10 both ways. Come back up, we overshoot, kind of a pullback. Great test of support. Perfect support, like you cannot get any more precise. This green candle, same here. Like this is almost a 10 out of 10. This red candle is a 10 out of 10. This is like a 9.8 out of 10. So, I mean, but it could literally go higher. It could always go higher. The trend is your friend until the end, pretty much. So, excuse me. We have that. Okay, now question, why did I do that? Well, we have a great test of support here. This candle's basically saying draw a line under me. This candle says, hey, between this red candle and this candle, draw a line. Perfect supports, perfect supports. Again, reconfirming our line right here, reconfirming our line, reconfirming our line. This candle reconfirming our line right there. So I think this stock, maybe there's some consolidation and we see a little, it's going to come back to reality maybe over here. And this does get us to our 1490 area. No, it doesn't. I'm sorry. The 1490 is right up here. I lied. So here. So kind of, it looks like a potential ascending triangle, which is overall bearish. But what we see happen is we have some resistance up here, come and consolidate, maybe test it again, test, maybe shoot up a little bit and then come downward. So come up and then come down. And it's not a bad thing. It's just a technical move and it's a healthy pullback most of the time. So yeah, again, this could always go up. I have my price target set higher. Institutions are buying a little bit more. Gross margins are absolutely incredible. Sales just continue to grow. Not a fan of their negative net income. They're not profitable, as we can see here. We do see some shorting going on here. I just clicked something. I don't know where it's going to take us, but I didn't know it could show us this. Whatever it shows us, I don't know. Anyway, okay, so it does show short interest. That's pretty cool. So short interest has gone up. Short percent float. Yeah, the float's lower because there's more shares outstanding. As we can see, there's a lot more short interest. So anyway, that's pretty cool. Is there any other items I could click on the chart? Now we're just kind of doing bonus time. Don't forget to drink any water. That was pretty cool. What else can I click on? Short ratio. So these three things are obviously correlated and intertwined. I feel like I'm in a digital escape room. And I need to figure out where the other links are. Well, I guess I found it. It was only these three. So glad we all made it through that digital escape room. If you made it this far, consider subscribing. Hope you're doing well. See you tomorrow.